Markets on the edge. Futures open amid Bitcoin's bounce and AI stock roller coaster. But what's really at stake? Imagine waking up to a world where financial markets are like a high-stakes game of musical chairs. Everyone's scrambling for a seat before the music stops. That's the tension gripping investors right now, as we gear up for Dow Jones futures to kick off trading this Sunday evening, alongside S&P 500 and Nasdaq futures. Bitcoin, often viewed as the wild card in the market's deck, has shown signs of life with a weekend bounce, potentially signaling resilience in the face of broader uncertainties. Last week was brutal, with major stock indexes plunging below critical support levels, even after Nvidia's blockbuster earnings report that had many hoping for a turnaround. But Friday brought a glimmer of hope, as stocks rebounded on fresh optimism about the Federal Reserve cutting interest rates. Nvidia, Apple, and Eli Lilly are under the spotlight, with their moves likely to influence market sentiment. But here's where it gets controversial. Is this bounce just a mirage? Or could it mark the start of a real recovery? And this is the part most people miss. The interplay between traditional stocks and digital assets like Bitcoin might hold the key to understanding these wild swings. Diving deeper for those new to investing, let's break this down. Futures are essentially contracts to buy or sell assets like stocks or indexes at a set price on a future date, giving traders a peek into how Monday's market might open. Bitcoin, the popular cryptocurrency, has been a barometer for risk appetite. When it rises, it often means investors are feeling bolder. Nvidia, a tech giant known for its powerful graphics chips used in AI and gaming, delivered earnings that underscored the demand for advanced computing. Yet, the broader market downturn shows how interconnected everything is. For example, if interest rates drop, it could make borrowing cheaper, boosting company profits and stock prices. Apple, the iPhone maker, and Eli Lilly, a pharmaceutical leader in diabetes and Alzheimer's treatments, are key players because their performance affects consumer spending and healthcare investments alike. Think of it like a family dinner. One person's great news, like Nvidia's earnings, can lift spirits, but if the Fed's rate decisions sour the mood, everyone feels the chill. Now, shifting gears to related developments, there's a fascinating, perhaps unsettling, story unfolding in the world of artificial intelligence stocks. Many of these have slid back from their 52-week highs or all-time records, prompting what analysts call a show-me moment. Investors are demanding tangible proof that AI isn't just hype. As detailed in a recent Investors.com article, https://www.investors.com/news/technology/artificial-intelligence-stocks, Google has bucked the trend and climbed higher, while Oracle and Meta have tumbled. This divergence raises eyebrows. Why is Google thriving when others are struggling? And this is where controversy brews. Could this be the bursting of an AI bubble, or just a healthy correction in an overheated sector? Skeptics argue that overvaluation has set in, with companies pouring billions into AI projects that may not yield profits anytime soon. For comparison, remember the dot-com bubble of the early 2000s. Back then, tech stocks soared on promises of internet revolution, only to crash when reality didn't match the hype. Here, AI stocks face similar scrutiny. Are we witnessing innovation or speculation run amok? To put it mildly, the AI landscape is polarizing. On one hand, proponents say Google's gains prove AI's transformative power in search and cloud computing, potentially leading to massive efficiencies in everyday life, like smarter virtual assistants or better medical diagnostics. On the other, critics point to Oracle's and Meta's declines as evidence of investor fatigue, questioning whether the AI gold rush is sustainable without real-world payoffs. And this is the part most people miss. Regulatory hurdles, like data privacy laws or ethical concerns over AI bias, could further complicate matters, turning potential winners into long-term losers. What do you think? Is the AI show-me moment a wake-up call for over-enthusiastic investors, or an opportunity to pick up undervalued gems? Do you agree that Bitcoin's bounce signals broader market strength, or is it a fleeting illusion? Share your thoughts in the comments. Agree, disagree, or offer your own take. Let's discuss.